What do you think about the idea of building a small portfolio of dividend stocks that pay dividends monthly and choosing ones that generate enough to cover your rent or even your mortgage? It's absolutely possible. Let me show you how. Quick disclaimer, this video is not financial advice but merely my thoughts and analysis. Any investments you make are at your own risk. Remember, all investments carry the risk of losing the entire amount invested. Most of the dividend stocks proposed for this portfolio have been on the market for over 20 years and pay dividends to their shareholders on a monthly basis. Additionally, I've selected companies operating in various sectors of the economy, real estate, finance, technology, and commodities to diversify the risks as much as possible. Well then, let's get started. The first company I'll start with is Realty Income, trading under the ticker symbol O. This company has been paying dividends for over 25 years. Realty Income Corporation is a real estate investment trust. The company specializes in acquiring and managing freestanding commercial properties that generate rental revenue through long-term net lease agreements with its commercial clients. It focuses on a single business activity, leasing properties to clients, typically on a net lease basis. This is a highly diversified real estate fund that includes commercial, office, and industrial properties. Moreover, these properties are located across the United States, in states like Texas, Illinois, Florida, and California. At the time of filming, the price of one share is approximately $53, with a dividend payout of 26 cents per share. The next company is Main Street Capital, a financial and investment firm headquartered in Houston, Texas. Main Street Capital provides long-term loans to small and medium-sized businesses. The company has a broad and diversified portfolio, which includes businesses such as digital marketing service providers, hose manufacturers, a cafe chain, and many other small and medium enterprises. With over 100 positions in its portfolio, Main Street Capital is able to consistently pay monthly dividends to its shareholders. Currently, the price of one share is just over $56, with a dividend payout of 25 cents per share. The next investment is a fund designed to provide investment results that closely align with the price and yield performance of the CBOE Nasdaq 100% Buy Right Index. The fund invests at least 80% of its total assets in common stocks included in the index and employs a replication strategy to closely track its performance. The fund primarily consists of technology companies, but it is also diversified across other sectors, such as telecommunications, healthcare, and fintech. Top positions in the fund include Apple, Amazon, Nvidia. As of today, the price of a share is nearly $19, with a dividend payout of just over 18 cents per share. Of course, this list is far from exhaustive. It can be expanded and updated endlessly. New companies are constantly emerging, and the conditions and payout amounts of existing ones are always changing. Here, I've selected 3 of the most reliable companies, in my opinion, that have been consistently paying dividends for over 2 decades. You can try adding companies to this list on your own, but here's an important note. Do not invest in stocks with the highest dividend yields. There are many stocks offering yields of 10% or more, but in the long run, you'll lose as much as you gain in dividends due to falling stock prices. This strategy won't lead to anything productive. Instead, focus on investing in companies that not only provide dividend income but also grow the stock's value over time, ensuring the growth of your investment portfolio. What to consider when choosing dividend stocks? First, dividend yield. This is the percentage of the stock's price paid annually as dividends. A moderate yield, such as 2 to 6%, is usually better than a very high one, which may not be reliable. Second, payout ratio. This shows the proportion of a company's net income paid to shareholders as dividends. It's important to assess whether the company can sustain its dividend payments. If dividends are paid at a loss, with a payout ratio above 100%, this is unlikely to continue for long. These figures can be found on most investment platforms or in the company's annual report. Third, dividend growth trend. Check how dividend payments have changed over the past 5 years or more. A consistent increase in payments indicates financial health and growth potential. By evaluating these factors, you can choose dividend stocks that are both profitable and sustainable. How much do you need to invest to receive payments that cover your rent or mortgage? Let's calculate. I'll calculate this using the 3 stocks I described earlier, and you can do the same for your portfolio. First, calculate the average annual dividend yield of your stock portfolio. This is simple. Add up the annual dividend yields of all the stocks in your portfolio and divide by the total number of stocks. In my example, the current average for these 3 stocks is about 7%. Second, determine how much money you need to cover your rent or mortgage. For example, let's say it's $1,500 per month. This is the average mortgage payment in North Carolina. Multiply this amount by the number of months in a year, 12. $1,500 12 equal to $18,000 per year. Third, divide this annual amount by 7%, and you'll get just over $257,000. The obvious question arises, where do you get $257,000? That's a huge amount. In reality, it's entirely achievable. Anyone can accumulate such a sum over a time horizon of 15 to 20 years. Check out my video on how to become a millionaire. The link is in the top right corner. Well, that's all for today. Now you know how to start earning income from dividend stocks that can cover your mortgage or rent payments. Don't forget to subscribe to the channel, hit the notification bell, and give this video a like.